welcome back to another video, guys. In today's video I'm going to be covering what the common mistakes that were made by me earlier on in my forex career. What mistakes do new traders make and how can we avoid them. There's a list of mistakes that really cost me a lot of money, a lot of time at the beginning of my forex trading career, and this video is all about me being transparent and me showing you what the things that held me back, and I found this out through my journaling. So I'll be going into that and I'll be explaining each one of the mistakes and how you can avoid them, and how you can, what type of mistakes they are, so that you don't make the same mistakes and it doesn't waste your time like it did wasting mine, and it doesn't hold you back from succeeding in forex trading. So let's get started. First thing first, guys, please read the disclaimer below. Once you've done, please continue with the video. Okay, I'm hoping that you guys have read the disclaimer by now, so let's get started. Like I was saying earlier on, guys, I made a lot of mistakes at the start of my forex career. This is something that I learned the hard way, something that it took me a long time to figure out, something that I shouldn't have done in the first place. But when you're trading actively in forex, you don't know what mistakes you're making. Unfortunately, there's no one there to tell you unless you have a mentor, that these are the things that you're going wrong and these are the places that you're not doing right, and then this is what you should avoid and this is what you should do and shouldn't do. So in the trading world, it's more like a trial and error type of thing. So the more you fail, the more you learn. And I failed for a very long time before succeeding in forex trading, and then these are the things that held me back. So this video is all about me being transparent and me showing you what didn't work for me and how you could avoid being in the same situation. So let's get started. The first thing is, guys, is lack of trading plan. As you know, guys, a lot of forex traders, they don't really have a trading plan. They don't have a strategy, they don't have a risk to reward ratios, they don't have things like the entry and exit points, and this all comes from the trading plan. Basically, this also helps with the stop losses as well, and it tells you when you can and when you can't execute the trade. So I would highly recommend you guys to have a trading plan, because without a trading plan there won't be a direction, and without a plan you can't hit a target that you can't see. So you will have to create a trading plan based on your strategy with proper risk management, proper risk to rewards, and hopefully you can then you'll know what to do in the forex market, and you can follow that plan, and you can make changes as you go along, not major changes but minor changes like the risk to reward ratios or the stop losses. Ultimately your plan stays the same. So without a trading plan, guys, I struggled for a long time. So this is something that I would suggest you guys to create a trading plan with full details of your strategy, your entry and exit points, and how you can enter the trade and how you can exit the trade when it's right for you to do that, and put everything in there that you need to know. I'll be making a detailed video on trading plan as well, so you can you can have a look at that as well, how I made my trading plan, and this you can do yours the same way. Okay, so next mistake is, guys, we are basically over leveraging. So I over leveraged for a long time, and I blew a lot of accounts like that. As you know, leverage is a double-edged sword, and it can work. Whilst it can be very beneficial for you, it can be really it can maximize your losses as well, meaning that you'll lose more capital. So don't over leverage, guys. Use the right amount of leverage, and then hopefully that will help you avoid bigger losses, and don't be greedy thinking that with the more leverage you'll get higher profits, because 9 times out of 10 you'll end up losing money, and then you'll dig yourself a bigger hole than you need to. Again, guys, there's another one that's really important, which is over trading. So over trading, guys, I've done this for a very long time. So I used to trade almost all day, which I shouldn't have done. So when you trade, when you're looking at the screen for too long, when you sat there without a break, you're absorbing too much information in your head, and you'll end up over trading by taking loads of positions. So how to avoid this is have a certain amount of positions that you can take. So let's just say that you only limit yourself to 3 or 5 trades a day, unless you're a scalper. But I'm not a scalper, that's not my trading style. So like this, over trading can be, it can work against you, and it can also get you in positions that you don't need to get into. So you can obviously, without entering without a clear strategy, and entry without a clear analysis, will avoid your success, and it will help you. It won't help you succeed in the forex market. So over trading can be a big problem as well. So this is something that I would avoid. I would suggest you guys to basically don't trade too much, because when the more trades you get into, the higher the risk. So this is something that you guys will need to avoid. The next one is ignoring stop losses. So I did that as well. I ignored them, I didn't set a stop loss, and then I ended up in huge loss. So before you enter the trade, guys, make sure you set yourself a stop loss, and know how much you're willing to lose, and only lose what you can afford instead of losing more than what you can afford, because this will really affect your psychology, and it will also affect your trading, because you won't be able to succeed that way. Another one is chasing the market. So when you're chasing the market, guys, what I mean by that is I used to do the same thing, and this was jumping into the trend too late, or it was jumping into obviously trying to catch an early move. So there's a timing for everything, guys. You don't have to chase the market. If you've missed something, don't enter the trade, let it go, because that's been missed. And if you think that you can enter early to decrease your stop loss, don't do that as well, guys. Wait for the right patterns, wait for the right confirmations, then enter, because that will increase your probability. If you're enjoying the content I'm providing, please like, comment and subscribe to my YouTube channel for more videos. Thank you. Another one is letting emotions drive decisions. So guys, in forex traders, we can't be emotional. We really need to have a control over our emotions. We can't get annoyed, or we can't get angry when we lose a trade, and we can't get too excited and start dancing or go for the party once we've won the trade as well. So it's really important that we control our emotions when we win and when we lose, because this way it will help us to last a sustainable forex trading career. We need to really control our emotions. We can't let fear or greed or anything, or excitement or anger, or get into the way of our trading, guys. So this is something that I would suggest you guys to avoid. Another one is neglecting fundamental analysis. So there's a lot of traders that don't really look at fundamentals, guys, but it's really important that you look at the fundamentals, the interest rates, the economic data, the things like the non-farm payrolls. So when there's a high impact news, guys, don't trade the high impact news, because I've lost a lot of money trading the news. Trading the news is like gambling, and we're not here to gamble, we're here to make profit. So I would suggest you guys to look at your fundamental analysis and avoid trading the news, and make sure that you absorb the information. And sometimes you can patch up the fundamentals with the technicals, and then that will help you with your forex trading as well. Another one is we rely on others for trading decisions, guys. This is probably the worst one, because we are blindly entering the trade, and we're just looking for someone else's decisions. So this is something that you guys should avoid. So don't take suggestions off your mates, or don't take suggestions off your these groups on Facebook, etc. Just do your own thing. What you think is right, do that, because other suggestions, they might not be right for you. It's their perspective, not your perspective. And trading's more, unless the person is unless it's a signal group or something like that have got a really good reputation, then you can take their opinion. But don't just take a random guy's opinion that you met 2 days ago, or you've known on Facebook for 10 minutes, because that won't help you in your forex trading, and you will 9 times out of 10 you'll end up in a loss, guys. Another mistake is not continuously learning. So when we don't learn in the forex market, guys, we're not updating the knowledge. So we need to learn and adapt to our mistakes and the things that market portrays on daily basis, so that we make the right decision in the forex market. So again, knowledge makes you successful. Remember that, guys. Another one is ignoring fees and costs, guys. So we need to know the spreads, we need to know the cost of different sessions, we need to know the cost of us to enter the trade. Again, if you don't know this information, and if you're going to hold trades on periods over the weekend, we might get stopped out by the liquidity, we might get stopped out because the spreads are so large. So we need to really avoid holding trades over the weekend. And if you don't know, if there's high spreads on sessions like the Asian session, for instance, compared to London or the New York, then this is something that we need to bear in mind as well when we're saying the stop losses, because we don't want to be stopped out, guys. And obviously in that way you lose more trades than you will win. So we need to know exactly what we're doing, guys. Another one is having unrealistic expectation. So in forex trading, you can't have unrealistic expectations, and you can't expect to make millions, or you can't expect to make hundreds of thousands of pounds or hundreds of thousands of dollars within a month, because it doesn't work like that, guys. It's a process that takes time, and it's a process that you need to master before you can start making money. So that's, we need to have realistic expectations, and don't let unrealistic expectations drive our greed or our emotions in the way, because in that way we will end up losing money in the forex trading. This is one of the most important ones. So we need to have a proper risk management plan. So what percentage are we willing to risk on one trade, what percentage are we willing to lose in a week, in a day, and how much we can afford to lose is really important. So draw yourself a risk management plan based on your trading strategy, based on what you can absorb to lose. And it's really important that we set these parameters, and once we have lost a certain amount, we stop trading and we don't revenge trade, because in that way we can end up losing more money than we're going to make, and that's not really going to help you sustain your forex career. Another one is switching strategies to optional often. So what I mean by that is, guys, if one strategy is not working for you, you've gone on to another strategy, you'll get a win there, and then you'll get another loss, and you think, oh, this strategy is not good. So we can't jump from one strategy to another. We need to give strategies time, because every strategy has the win rate, every strategy has the losing rate. So it's really important that we understand the strategy, we give it time, and don't switch strategies unless it's absolutely necessary and you think that this strategy is not going to work. So you should have at least a month's data for you to analyze whether this strategy is right for you or not. This is just my opinion, it's not a fact. You might have a longer data, for instance like 6 months or a year. So we can't hop onto one strategy from one strategy to another strategy, because like this we'll end up losing money, and we're not used to that strategy as well. And again, practice makes perfect, guys. So we need to know the decisions that we're making in forex trading. Conclusion, guys, we need to avoid these mistakes, and obviously forex trading requires skill and discipline and continuous learning. So we need to avoid these common mistakes and become